Many of you are sitting on the edge, wondering if your gains evaporated, or worse, if a storm is brewing that could decimate everything you've built. The fear, the uncertainty, it's palpable. But here's the cold, hard truth. What happened yesterday was just the beginning. And the answers you desperately need are hidden in plain sight, if you know where to look. Today, we're pulling back the curtain on the Fed meeting aftermath. We're not just going to tell you what happened, we're going to show you why it happened, and more importantly, how it directly impacts XRP, HBAR, and your entire crypto bag. We're talking about the invisible strings of global finance, the ones Jerome Powell is holding, and how they tug at the very assets you believe in. By the end of this video, you'll understand why the headlines might be lying to you, what the real power players are actually doing with their money, and how you can position yourself to not just survive, but thrive in this new landscape. This isn't just about understanding the market, it's about understanding your future in it. For weeks, the whispers grew louder. Will Jerome Powell cut rates in July? The market was practically begging for it. Every pundit, every amateur analyst, even some major players, seemed convinced it was inevitable. Yet, the Fed held steady. The CME FedWatch tool screamed a less than 5% chance, but still, the hope persisted. Why? Because the market wanted it. It craved the liquidity. It craved the free money sensation that lower rates bring. But what if that craving is exactly what Jerome Powell is trying to starve? What if his inaction is, in fact, his most powerful action? And how does this seemingly neutral move, this holding steady, actually become a direct threat, not just to Bitcoin, but specifically to the nuanced movements of XRP and HBAR? The answer isn't in what did happen, but what was prevented from happening. Type stable in the comments if you thought the Fed would hold rates. Let's look at the immediate aftermath. You saw it, Bitcoin barely clinging to green, Ethereum up a tiny fraction. But the vast majority of the altcoin market? A sea of red. Why? Because when the Fed holds, it's like a dam holding back a flood. The expected surge of risk-on capital, that fresh money looking for a home in high-growth assets like crypto, just didn't materialize. Think of it like this: imagine a grand party, and everyone's waiting for the music to drop. But the DJ Jerome Powell just stands there, staring at his turntables. The energy dissipates. People get bored. Some even leave. That's what we saw yesterday. Liquidations spiked. Over $421 million wiped out in just 24 hours. Long positions, betting on a market surge, got wrecked. One Ethereum long alone saw $5.44 million vanish. This wasn't just a slow day, it was a strategically boring day that caught many off guard. Powell's casual remark, "It's too soon to flag a September rate cut," was a subtle yet devastating blow. It deflated the immediate September hope, pushing money back into safer havens like the dollar. Now you might be thinking, but what about the pressure? Didn't people like Donald Trump absolutely scorching Jerome Powell for costing the US billions? Yes, they did. Trump called Powell too late, slamming him for every point of interest, costing the US $365 billion a year. He's not wrong about the cost, but here's the twist: Jerome Powell is not playing Trump's game. He's playing his own. BlackRock even came out and said the Fed should cut rates. Yet, Powell stood firm. Why? Is he truly independent, or is there a deeper, more calculated play at hand? And if he's not cutting rates now, what does that mean for the next crucial date, September? The CME FedWatch tool still shows a significant chance of an ease in September. But if Powell dampened this meeting's hopes, what's different for the next one? And how does the specific timing of a potential September cut become a massive catalyst, especially for assets like XRP and HBAR, which are quietly positioning themselves for a future beyond simple market cycles? Type Powell plot in the comments if you think Jerome Powell has a secret plan. When Jerome Powell held rates, the immediate winner was the dollar. The DXY, the US dollar index, surged significantly. Why? Because when risk assets like stocks and crypto look less appealing due to higher interest rates, money flows into the safest, most liquid asset, the dollar. It's a flight to safety. This surge in the dollar acts like a vacuum, sucking liquidity out of risk-on markets. But here's the flip side: we're watching for the DXY to hit resistance, to reject this strength. A sell-off from here, a weakening dollar, would be like opening the floodgates for crypto. Now, about September. Despite Powell's caution, the market is still pricing in a high probability of a rate cut, over 40% for September, and over 60% for October. This isn't just wishful thinking. This reflects a deeper understanding of economic pressures. We anticipate not just one, but 3 rate cuts by the end of the year: September, October, and December. Why? Because the cost of doing business, the cost of borrowing money, is simply too high for too long. Lowering rates makes money cheaper, encouraging investment, spending, and crucially, flowing into speculative assets. So if we're expecting rate cuts later this year, why the current stagnation? Why the seemingly boring market, as some are calling it? Because markets don't move in a straight line. We're in a consolidation phase. Think of it like a coiled spring. Bitcoin has been ranging for over 17 days, just like it did for nearly 50 days back in May before its last big impulse move. We're likely looking at another few weeks of this sideways action, potentially until mid-August. This is the quiet accumulation phase. The smart money is positioning. But what does this boring period mean for assets like XRP and especially HBAR, which have their own unique adoption narrative separate from just macroeconomics? Are they just waiting for Bitcoin to make a move, or are there deeper, more powerful forces at play that even Jerome Powell's decisions can't fully control? This is where the story gets really interesting. Type coiled spring in the comments if you believe in the power of consolidation. Let's get technical for a moment. For Bitcoin, keep your eyes glued to two crucial levels, $117,000 and $120,000. A daily candle close above $120,000 could signal the start of a new, aggressive push upwards. A close below $117,000, however, could indicate a deeper pullback, potentially shaking out weaker hands. This is your battleground. Now for XRP. Just like Bitcoin, XRP has been ranging. It's been holding strong, but the critical level to watch is $2.96. This isn't just a random number, it's a key support level built on past price action. If XRP loses this $2.96 floor, we could see a retest of previous highs around $2.62 to $2.72. This would be a buying opportunity for many, but a significant drop for others. But if XRP holds $2.96 and Bitcoin starts its upward ascent, we could see XRP retest $3.49 to $3.50, aiming for that breakout towards $4 plus. The regulatory clarity surrounding XRP, despite the ongoing appeals, is a distinct advantage that sets it apart from other cryptos, making it less vulnerable to direct Fed shockwaves and more aligned with its own adoption path. And then we have HBAR. Many of you are seeing it sitting in that red zone, fighting for traction. There's a real possibility of HBAR retesting 17.5 to 20 cents. I know, that's a 23% to 30% drop from current levels, and it sounds painful. It's what we call an exaggerated drop. But what if this potential dip, this exaggerated drop, is actually the market doing what it does best, shaking out the weak, creating irresistible buying opportunities, and setting the stage for a rebound that will defy the general market sentiment? Why is HBAR so resilient to these macro movements? Because its fundamental utility, its enterprise adoption, is playing on a completely different field. What if this apparent weakness is a strategic move, a final test before HBAR reveals its true, game-changing power, a power that even Jerome Powell's influence can't contain? This is where the story of HBAR truly takes off. Type HBAR power in the comments if you believe in BAR's long-term potential. Unlike traditional blockchains, BAR's underlying technology, Hedera hash graph, uses a directed acyclic graph, or DG. Think of it like a highway system where traffic flows in multiple directions simultaneously, rather than a single-lane road. This allows for incredible speed, thousands of transactions per second, and near-zero fees, around $0.0001 per transaction. This isn't just a technical detail, it's a game-changer for real-world adoption. While others chase retail hype, HBAR is quietly building the infrastructure for global finance and technology. We're talking about banks, governments, and tech giants like NVIDIA actively building on Hedera. The recent partnership with NVIDIA for verifiable compute integrates Hedera's consensus service directly into NVIDIA's AI chips. This means HBAR is becoming the DNA of modern AI systems. When AI needs secure, verifiable computation, it will increasingly rely on HBAR. This is not a speculative bet, it's fundamental utility. And that potential 23 to 30% drop? If it happens, it's a gift. It's a chance to accumulate an asset that is already deeply integrated into systems far beyond what a simple rate cut can impact. BAR's value isn't just in market sentiment, it's in the actual, provable, real-world utility that the biggest players in the world are adopting right now. So we have the dollar hitting key resistance, signaling a potential reversal. We have the Fed holding rates for now, but with strong indicators pointing to cuts later this year. This creates a fascinating duality, a seemingly bearish short-term outlook countered by a powerful underlying bullish sentiment for risk-on assets, especially those with real utility. Is this current boring market simply a distraction? A smokescreen while institutions, keenly aware of the dollar's future weakness and the impending rate cuts, are quietly methodically accumulating assets like XRP and HBAR? They don't announce their moves. They don't need FOMO. They just buy. And what if the very language Jerome Powell uses, his measured tones, are designed not to calm, but to control the narrative, to keep retail investors guessing while the smart money positions itself for the next, inevitable explosion. The real game is played in the shadows. Type quiet accumulation if you're watching for institutional moves. This isn't your average crypto bull run, fueled by memes and pure speculation. This is a fundamental shift. We're moving into an era where real-world utility, institutional adoption, and regulatory clarity are the ultimate drivers of value. XRP, with its relentless pursuit of a clear regulatory framework in the US and its undeniable role in cross-border payments, is on the verge of shedding its security label for good. The community is buzzing about August 15th, a crucial date for a joint status update with the SEC. A final settlement would unleash XRP onto mainstream exchanges and potentially pave the way for an XRP ETF. Imagine the institutional capital flooding in then. We're talking about a potential $10 to $30 price range if these conditions align. An HBAR? It's not just a decentralized ledger, it's the quiet backbone for massive enterprises. From supply chain management to verifiable AI computations with NVIDIA, its use cases are growing at an exponential rate. When Lloyds Bank and Aberdeen Standard are using Hedera for a $10 billion asset settlement, you know it's not just hype. HBAR is being integrated into the very fabric of global commerce. This is the definition of utility. While Jerome Powell talks about interest rates and inflation, there's an even bigger narrative unfolding behind the scenes, one that directly benefits assets like XRP and in a more subtle but equally powerful way, HBAR. I'm talking about central bank digital currencies, CBDCs, and the massive global financial shift to ISO 20022. Every major central bank, from the US to Europe, is exploring or actively developing a CBDC. This isn't just digital money, it's programmable money. And for these systems to talk to each other, to move trillions across borders seamlessly, they need a standardized language. That language is ISO 20022. So the question isn't if these new digital financial rails will be built, but which assets will form their backbone. And how does Jerome Powell's careful dance with inflation and interest rates indirectly accelerate this transition, pushing the world closer to a future where XRP and HBAR are not just cryptocurrencies, but essential components of global infrastructure? Type CBDC future in the comments if you're following the CBDC narrative. XRP is purpose-built for cross-border payments. It's faster, cheaper, and more efficient than traditional systems like SWIFT. With ISO 20022 becoming the global standard for financial messaging, XRP is positioned perfectly to be the bridge currency in this new interconnected financial grid. Its regulatory clarity, especially in key jurisdictions, gives it a massive advantage. When trillions start moving digitally, the demand for XRP as a neutral, efficient settlement layer becomes undeniable. This isn't just speculation, it's a logical progression. And HBAR? While XRP focuses on payments, HBAR is tackling the data and asset layer of this new financial grid. Think real-world asset, RWA, tokenization. Real estate, commodities, intellectual property, everything is being digitized and put on-chain. Hedera's fair, fast, and secure network is ideal for this. It provides the verifiable compute and data integrity that institutional players demand. So while Jerome Powell debates 25 basis points, the world is fundamentally rewiring its financial system. And XRP and HBAR are not just along for the ride, they're the engine of this transformation. What many fail to grasp is that the debates around interest rates and inflation are just one layer of a much larger silent war for global digital dominance. Every nation, every central bank, every major corporation is vying for control or influence over the next generation of financial infrastructure. Jerome Powell's seemingly cautious stance is part of a delicate balancing act, controlling inflation while not stifling innovation too much. But while he's focused on the domestic economy, the rest of the world is moving. Europe has already cut rates multiple times. China is aggressively pursuing its digital yuan. So, who wins this silent war? And how do assets like XRP, which is already proving its global utility, and HBAR, with its deep enterprise integrations, become the ultimate beneficiaries, even if Jerome Powell keeps playing a conservative hand? Is this the ultimate setup for a slingshot effect when the macro environment finally shifts in their favor? Type digital war if you see the bigger picture. Imagine that coiled spring we talked about earlier. The longer Jerome Powell keeps rates elevated, the more pressure builds in the economy. The more the dollar strengthens, the more it creates an eventual need for it to weaken. This isn't a theory, it's an economic inevitability. And when that spring finally releases, when the rate cuts finally hit, the explosion of liquidity will be unlike anything we've seen. Goldman Sachs is already projecting the S&P 500 to rally significantly in the next 6 to 12 months due to expected rate easing. When traditional markets see this kind of liquidity influx, a tidal wave of capital will inevitably wash over crypto. And this is where XRP and HBAR shine brightest. They're not just riding the general crypto wave, they're the leading edge of it. Their fundamental utility, their institutional connections, and their unique technological advantages mean they will not just participate in the rally, they will lead it. They're like specialized high-performance vehicles waiting for the green light, while others are still stuck in traffic. Now let's talk about HBAR specifically, because this is where the climax of our story truly lies. We've discussed its tech, its enterprise adoption, its potential exaggerated drop. But there's something even more profound happening with HBAR right now that makes its potential, regardless of Jerome Powell's immediate actions, almost inevitable. Think about the biggest challenges facing the digital economy: scalability, security, and true decentralization at an enterprise level. Most blockchains struggle with one or more of these. Hedera, with its hashgraph technology, solves them. This isn't a theory, it's being proven by some of the most powerful organizations on the planet. But what is the one thing that could accelerate BAR's adoption into an unstoppable force, a force so powerful that it makes short-term market fluctuations seem like tiny ripples? What is the real secret that makes HBAR the undisputed dark horse, poised to explode in ways that will leave many, including the casual observer of Jerome Powell's pronouncements, completely bewildered? Type HBAR secret in the comments if you want to know the ultimate HBAR catalyst. The HBAR secret isn't just one thing, it's the convergence of multiple monumental shifts. First, the AI revolution. We're on the cusp of an AI-powered world, and AI needs verifiable, secure, and transparent data. It needs a trusted ledger for its computations, for its transactions, for its very existence. BAR's recent NVIDIA partnership isn't just a collaboration, it's the foundation of HBAR becoming the DNA of AI systems. Imagine every AI agent, every smart contract, every verifiable computation in the coming decades, needing HBAR to function. This is beyond mere enterprise adoption, this is integration at the silicon level. Second, the rise of the machine economy. As IoT devices proliferate and machines transact with each other, they need a robust, low-cost, high-throughput network. HBAR is perfectly suited for this, allowing for micropayments and secure data exchange on an unimaginable scale. This isn't just about finance, it's about the future of everything connected. And finally, BAR's governance model, backed by a rotating council of global giants like Google, LG, and others, ensures its stability, security, and decentralization at an institutional level. This isn't a centralized entity, it's a global consortium building the future. While Jerome Powell influences the flow of fiat, HBAR is building the rails for the next generation of digital value exchange. Its current price action is simply the market shaking out the weak hands before the true, undeniable utility takes hold. This isn't just about a pump, it's about fundamental ingrained demand. The very fabric of our digital future is being woven with HBAR. The red zone on the chart isn't a warning, it's an invitation. A final opportunity to understand that Jerome Powell's influence, while significant in traditional markets, is merely a ripple in the ocean compared to the tsunami of innovation and adoption that HBAR is silently building towards. When the world truly understands what HBAR is doing, and how critical it is to the coming AI and digital economy, its price will not just move, it will catapult. So, did Jerome Powell break XRP, HBAR and crypto? In the short term, he created turbulence, a necessary shakeout. But in the long term, he merely delayed the inevitable, allowing the underlying fundamentally strong assets to consolidate and prepare for their true breakout. You are no longer just a spectator, you are now equipped with the knowledge to understand the deeper forces at play. The fear, the uncertainty, it's replaced by understanding. The noise from traditional markets fades as you see the quiet, unstoppable march of innovation and utility driven by assets like XRP and the truly revolutionary HBAR. This isn't just about making money, it's about understanding the future of finance and technology, and positioning yourself to be a part of it. Now, if you want to dive even deeper into the specific price targets for XRP as the SEC lawsuit nears its final resolution, and uncover the detailed roadmap for BAR's integration into the AI economy, then you need to watch my next video right here. Click that link to continue your journey and unlock the next level of understanding. Don't miss out on what happens next.